Good afternoon, everyone. Happy Tuesday. What a Tuesday it was. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody had a good day today. We had some momentum, some price shocks. So hopefully you guys did well today, or at least didn't get badly bruised. Okay. All right, everybody. So again, welcome. Gabe Velazquez here, transparenttrading-solutions.com. Again, give me a thumbs up. Put some commentary in the chat. Also, again, I have a class coming up, which actually is apropos for right now. Some options. If you guys again are interested in learning about options and how those can protect you, especially in a market like today. That would be that's coming up on Thursday. Okay. Hey, Kelly. Yeah, we'll discuss that in just a second. Are you new to the channel, Kelly? I haven't seen your name pop up in here, but welcome. Yep. So in any event, yeah, sign up for the newsletter if you're interested in the class. This is on Thursday, and also if you're interested in spending 5 days free, which today was a really good day. Oh, okay, good, Kelly, welcome. Okay, so let's get right into it. I only have half an hour, so let's rewind the clock back a little bit. And we basically came into and I wrote about this over the weekend. I actually posted my market overview for my elite members this morning, and essentially this latest rally that came in was anticipating a again, if you guys have been watching some of the media and the pundits and all this kind of stuff, everybody has been telling you that inflation has peaked. And so, the market, I do believe that the market, even after the last speech last week, basically was building in 75 basis points, but had and was kind of buying into the idea that inflation had peaked and therefore the Fed could kind of ease up on raising rates and so forth. Well, come in today, big shocker, not a big deal. In fact, I ended yesterday's closing session with my members pointing to the grain markets, nat gas, and oil coming up about $6-7 off the lows, and so on and so forth, and kind of hinting, saying, yeah, well, we'll see what happens there with inflation. In any event, on a charting, this goes back to what I've been saying here for various weeks, is, we are in a range. And, and again, one of the reasons I think we had such a huge sell-off today, and this always happens when everybody gets caught off sides. In other words, there were a lot of longs going into today based on, the recent trend and whatever, and the expectation again that inflation was going to be benign and so on and so forth. Now, unfortunately, there wasn't a ton of levels that you could trade against on the S&P. In fact, most of the smaller time frame levels that I was looking, I think if you were with me on Friday, I was talking about, now that the market's rallied, we probably want to be looking to short. And now that, right. But, it's one thing to say, okay, now we're going to short the market. You could have shorted today for some momentum. Clearly, there was some momentum to short against. But there wasn't really a ton of levels. In fact, some of the levels that if you're looking at actually blew through, went a little bit higher on the S&P, and then fell off sharply, right, today. But, again, my point is who actually, it's all great and good, the old Monday morning quarterbacking where, yeah, who knew in advance, first of all, that the inflation numbers were going to be higher than expected and that we've had such a huge sell-off? Nobody knew, let's be honest, right? So anybody tells you, oh, yeah, I told you so, this and that, again, right? So where are we at now? We have basically, and I actually got done with my members. We have essentially undone all of last week's rally in 6 hours of trading, right? Pretty much. That's really what we've done. We are, in fact, if you look at your charts on a daily, that 39.42 pivot is actually where we're actually catching a bit of a bounce after all of the momentum earlier today. Now, one of the missing pieces, and I will be looking to go long now at about I would say maybe 100 points below where we're at right now, 38.73, 38.75 ish area. You can see there's a level. There's actually a couple levels below that. The one missing piece, though, is the VIX. So the VIX, I've been writing about this. I've been talking about this. The VIX needs to get above 30. And then I'm also looking at a bunch of stocks, by the way. I have been holding off, haven't really done anything on stocks for obvious reasons. Didn't want, and again, I never buy high. As you know, we did actually catch some stocks on the way when we had the last sell-off in mid to June, and then the rally. But now a lot of these stocks are getting attractive again. So we'll be looking at that. Also, just as a point of reference for you guys have been tracking, I'm still long wheat. We're still long wheat at TTS. Still long oil, which did pretty well today, as you know. Still long oil. Have a long position in bonds, which were, because of the bond rally sold off today. But in fact, if you look at TLT, in fact, it went flat. So we're catching a little bit of a bid on bonds as the flight to quality starts coming back into the bond market. And part of that, by the way, is because the yields, if you think about it, you can go and get 3.75 on a 2-year treasury note right now. That's a pretty good deal. And so in a nutshell, now that yields are where they're at, especially on the shorter maturities, there is an alternative. Where before, when yields were zero for so long, the TINA thing, there is no alternative. Stocks were where it was at, easy money and all that. That's changing. And so if you look at the bond market, the bond market actually did catch a bid, and the 10-year, let me just kind of jump around here just a second. The 10-year barely broke hasn't even broken, by the way, coincidentally, the June lows around 114.11. So that's interesting as well there. Okay. So look at now. I'm not suggesting, on the actual levels, there is no level. It's just kind of a pivot low, whatever you want to call it. That's where on June 13th. Remember, that's where the bonds had a big rally, coincided with the big rally in stocks. So that's kind of interesting. And then the 30-year actually caught a really nice bid where, I'm long the TLT with some calls. That was actually up on the day, believe it or not, just slightly, right? It was up just slightly higher on the day, believe it or not. So all in all, our members are doing okay. We didn't get hurt. And again, catching some of the momentum. Actually, I did have some members catch some downside momentum. Notice what happened also is the S&P kind of held up pretty much all morning around 4,000, and then finally gave way an hour and a half before the open. So In a nutshell, let me just review here. Again, one day, now all the bears are going to come out of the woodwork again. And I still believe until the Fed, and that's probably not going to happen till, as I've been saying, I don't, their target rate is 2%, 4% on the Fed funds. The inflation target is 2%, Fed funds 4%. We're not there yet, right? In other words, I don't want to get too kind of intricate about it, but it's basically they want to keep their Fed funds target at 4, and inflation at 2 gives you a nominal yield of 2%. That's really their target, but we're a long ways from that. If you ever wonder why you hear that, right? 4% Fed funds rate target, 2% inflation. That's because their mandate is price stability. Yes. And so if you think about it, that is price stability. In other words, okay, so to sum this up real quick, looking for buying opportunities about 100 points below on the S&P to go long. We closed right at 39.57 on December contract, looking in the low 375, and there's another level around 344. You can look at your charts right now, your daily, hourly charts, and you can see those levels there. Okay, so check it out. And similar to what I talked about last week, if we get a rally, now you have to wait for a rally. Could you catch some downside momentum still? Yes, of course. But the further down we go, I would rather, again, wait for bounces. If you're going to get short, wait for some bounces. There's a level that was left from the pause this morning around 40.38 or so. So check that out. That would be the first area. If you're looking to catch a short, okay. Also on the Nasdaq, as we know, the Nasdaq is the most price sensitive to interest rates, and therefore it just took a beating today. However, all today's downside move simply erased all of the rally from last 2 weeks. So again, it's really important to put it in perspective. Yeah, that's all we did, and now we're going to be coming up to that 12K level. Again, it doesn't feel good if you're long stocks or whatever. Down 5.5%. I think it's the worst day. I think they're saying it's the worst day since like 2020 or something. I don't know. It's a pretty bad day. So now that level at 12K, which I mentioned, we had a monster rally off that. That is no longer valid. The challenge I'm having now with the Nasdaq again is if we clear that 12K level, which it's actually 11,942 was the low. That's actually the level. Really isn't a whole heck of a lot until you get even down to 11.4, and that's just a kind of a support area. It really isn't anything that I would consider a quality accumulation level. So it's going to be interesting to see. Now, could we hold again at 12K? Of course. It's going to be interesting how the market digests the information. Clearly, there's going to be lots of Bill. Well, again, I'm not going to go there. Right, Bill? All right. So on the Nasdaq, here's the thing. I'm going to give you a little hint. If you can't find a buy zone, a demand zone or whatever you want to call it on the Nasdaq charts that that's fresh or good quality and all that, defer to the QQQ charts, right? You see what I mean? If you look at the QQQ, which is the obviously the ETF, and go out to a daily level on the QQQs, right? Look at around 281, 280 on the QQQs, right? That